China's manufacturing sector is gaining momentum, with industrial profits rising 15.8% in March. That's the fastest growth pace since September. Let's take a closer look at the first quarter highlights. Now, from January to March, industrial enterprises' total profits were nearly $236 billion, up 15.5% year-on-year. Private firms led the growth with profits of nearly $60 billion. That's up 25.4% on a year ago. Profits in computers, telecommunication devices and other electronic manufacturing surged 120% year-on-year. The non-ferrous metal sector, including copper and aluminium, also saw profits jump 120%. Well, Rory Green is Chief China Economist with TS Lombard Independent Investment Research. Great to have you on the show again. Look, we've seen a strong jump there in industrial profits. What's driving that right now?
Yeah, it's a huge jump. Part of the recovery in industrial profits comes alongside a gradual stabilisation within the China economy. And that's been driven by very resilient exports, which have been great again for Q1, and also by a pickup in investment, which that has been probably the main delta in this profit move, is the resurge in property, even manufacturing and infrastructure investment. On top of that, we can't ignore the oil picture, of course, Juliet, and there are some outsized gains there that you cited from the commodity complex as well.
OK, so it's not just concentrated in a few sectors, it seems broader based. But what does the growing role of AI and higher-end manufacturing mean for China's industrial model overall?
It's, I think, the start of what could be something of a revolution in manufacturing, without being going into hyperbole here, Juliet. The scale of China's manufacturing industry, its competitiveness now both at relatively sort of low-end manufacturing and at the advanced end, and its cost structure are, I think, unique in history. We have an emerging market economy that is able to produce technology that is the equivalent of developed markets in the US and Europe. Combine that with the changes in AI we are seeing, which are not just in China, but I think China's probably one of the countries better placed to combine those with manufacturing. And the potential economic implications and geo-economic ones even are enormous.
Rory, how much pressure could rising energy costs put on the momentum that we're seeing from here on?
Yeah, that is certainly a concern. I think the big concern here is that is external. Chinese domestic firms are actually relatively well insulated, certainly compared to their global peers, from higher energy costs. China has a huge amount of reserves, access to Russian hydrocarbons at a discount, and then all these alternative sources of energy, coal, nuclear, renewables. It's really the impact we're looking at is most concerned for the PRC is a drop-off in export. That it'd be higher energy costs hitting the global economy and therefore damaging one of the key locomotives of China's growth. So actually, the domestic complex is pretty safe. It's that follow-through to external demand, which could be the higher risk here for China.
So in terms of China's industrial outlook, is that what you're watching most closely, exports?
Yeah, the two things I'm watching most closely is the export side and government investment. So been a big pickup in fiscal spending, and that's really helping stabilise the domestic economy. So we're looking for that to continue, and the exports as well as the two key hinge points for 2026.
Rory Green at TS Lombard, thank you very much indeed.